Hello, YouTube. I think there is a massive trap being set on the S&P 500. I am not sure whether this current box of consolidation, which completes a cup and handle pattern, is going to lead to a move higher or a move lower. We have a full doji on the daily, which just means indecision. And we have indecision after we are butting up against a key resistance area. We go all the way back to the beginning of June. So this is so important because we have a payroll Friday tomorrow and unemployment. And as of right now, this is going to be the most important data point because we've had Fed speakers out talking all week, but they've been unable to actually get the market down. The market going up as the Fed is trying to get more hawkish is actually counterintuitive, and it might be something that we could actually see take effect tomorrow when those numbers come out. We can also note there's very low volume on the daily, which just means that we're kind of in a bait and awe where everyone is waiting for that data print to come out. So we also talked about QQQ, which is now nearly 20%, actually probably more than 20% off its lows now. We were looking for 323. From our June low to now, we are up by 20.5%. We are still down more than 20 off of our, let me just check, from our all-time high. We're currently on QQQ. We're looking for 327. 32697 is going to be the exiting of the bear market territory. And we're above 323.14, sorry. So I think there's a trap being set, as I said at the outset. I'm just not sure who's going to get stuck. And something else I'm really paying attention to is the fear and greed. So as we look at the fear and greed, we are right back to neutral, which means that there is, people are as fearful as they are greedy. And I don't know which way it's going to take. Are we going to go into greed, which means the market's going to go up? Are we going to go back down into red, or the market's going to go down? I don't know. But I think that these massive short positioning here, again, this is on the E-mini futures, $200 billion position, almost 18 weeks in a row where they just keep adding and adding and adding and adding. They are either stuck, meaning this is going to be a continuation short squeeze, or they are going to stomp on the throat of these bulls and make us tank tomorrow on that payroll Friday. I don't know. I'm really not sure what's going to happen. There is a wall of doubt or a wall of worry as well. Market rally faces long list of obstacles, including recession risk, inflation, strong dollar, Fed hikes, earnings revisions, and geopolitical tension. As of right now, we are climbing all of that. And again, we also even heard from the Bank of England saying that they've raised rates by the most since 1995. That's 30 years, basically. And they warn of a long recession. So what's a long recession? It's bad. It's like stagflation, which means that we're going to have stagnant growth with high inflation. That is not what's going to make stocks go up. So as we look here to the heat map, I think it's pretty interesting to see what is starting to sell off. That is energy. And everything else is just kind of treading water. Walmart also down. They announced they're going to be laying off corporate employees. So that one doesn't really look like it's going to do all that great. But the broad theme for the last week is pretty much all green. And the theme for the last month is pretty much all green as well. So healthcare is starting to flip a little bit more red. Energy is still pretty bright green. It's just climbing the wall of doubt, the wall of worry. There's always something to worry about. And eventually, the market will latch onto a data point if the true move is going to be down. Meaning if the market wants to go down, even just to test this uptrend at roughly 408, that could be the catalyst. It could be the payroll number tomorrow. For me, it is the most important data point of the week. And I would also note the reason why I also think there's a trap being set is because people just cannot buy enough options lately. When I look here to SPY for tomorrow, August 5th, we're looking at SPY on the 16s, which just means eight strikes below and 8 strikes above. What's notable to me is just that there's a ton of volume, right? There's 300,000 in volume here at 415. There's also a call spread going up to 420. So this area here seems very busy, right? They really want to get paid. And when we look to the put side, we got it's really starting at about 414, and it goes down to 410 with open interest there. So maximum pain for tomorrow would be pretty much right where we are right now. Another doji, a whole bunch of nothing, where we close in between 414 and 415. So I'm noticing that we're either going to go a whole bunch of nowhere again tomorrow, where we pause with low volume, or we're going to get a decisive move, either a massive break up or a massive breakdown. And just as we zoom out here to get a little bit of perspective, let's flip these to full candles just for the YouTube audience, and you can see them a little bit better now. As of right now, we are inside of this yellow box. This yellow box signifies a pocket of supply and demand, where there are buyers and sellers who are both initiating and positioning. So as of right now, we have bounced off our uptrend and we formed a higher high. We're currently above last month's high. Last month's high is at 413.03, sorry. So anything above 413 into Friday would technically be very strong because that's also where we closed out last week. That's the high from last week, 413. Last Friday was the last calendar day of the week and the month. All right, so that's pretty much what I had to go through for today. So just a few more things to look at as we are trying to get a better pulse on what could happen tomorrow. Again, we can note here that QQQ did close green, so tech is definitely leading to the upside. The dollar is coming off, so looking here at the dollar on the daily, what we can note is just that the dollar is starting to come off. We have that key area at 106.56 here that we're starting to reject off of. We did lose our uptrend, but we are still above our 50 MA. I would also note that on the 10-year note here, we are ticking down. So this is generally going to be seen as something that is inversely correlated to tech. So as QQQ is up, it makes sense that we see the 10-year treasury note down. And just one more thing I want to look at here is going to be Bitcoin. So as we're looking to the later part of the week and the last part of the week, I'm really paying close attention here to the 200 weekly moving average at 22,872. We're about $300-$400 below that right now, and just an area for us to really pay attention to. Finally, Ethereum also looking very similar here, where we can note we got a relative low at roughly 1,700. I'm looking for us to potentially consolidate into this range here, going down as low as about 1,350. What else do we got here? Let's actually look at SPY on the weekly, just because I think that what's important for people to understand is that we did break out of our falling wedge, and QQQ is actually a better example of that, which we'll look at in a moment. But as we start to go higher, this is the area of resistance that I really want to see how we're going to act. We have to fall at least below 410.64 for there to be a bear break, but we could also be forming a handle. So if we tick down, this could be our cup. We could form a handle by coming down to roughly 395 to 400. If we're going to go for our lower uptrend, that's going to be at roughly 380. So we could see a retest at 380. And as I mentioned before, I think with this previous one here, if the bulls do not take their their foot off the gas, it means that these bears are really losing a lot right now, right? They're losing a lot. So they have to be smart about this. They need to not give them any relief to exit their position. So if we do start to see the chart move down, I will really be paying attention to whether or not there is a volume, because if there's volume, it means that these shorts are not relenting. We note over here on the volume that it's mostly still bearish. So the way to overcome a lot of bearish volume is to have a breakout of volume where we get a big decisive bar or a green one, or time on the chart, because big red bars can be taken out with multiple smaller ones. So if we can just go sideways for the next while and the chart can flatten out, that will be something that could potentially be what we're looking at. On the previous video, we also mentioned that August and September are generally going to be very slow months. It's only August 4th. The saying is sell in May and go away and come back on Labor Day. Labor Day is September. So there's potentially going to be a whole bunch of nothing going on. We might have already had our moves in, and we really have to pay attention to tomorrow. Also looking here at QQQ, again, really important where we're going to go. Technically, we are in a bull market off the lows, but we are also technically still in a bear market off the highs. So I would say that 320 to 325 is going to be very important, and also paying attention to volume. So again, volume trickling down as we go higher is generally going to be a warning sign. Price is king, and volume generally confirms. So with all that said, there's going to be a lot to go through. So if you want to hang out with us tomorrow, we will be doing an end of day live stream on our channel. Again, my name is Justin. We'll be scheduled for the final hour tomorrow. Whether we have a bear or a bull trap, we will review that tomorrow at 3 p.m. Eastern, 1 p.m. Pacific. Thank you again for watching. Look forward to seeing you tomorrow. Thank you.